Hey everyone, welcome back to Corporate Decoder, the place where we dig into the documents that companies try to keep boring so you don't have to. Today we're cracking open the latest filing from AUDDIA Inc., a company trying to change how we listen to radio and podcasts. Get ready for some twists because their path to success might sound a little staticky. Before we dive in, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below, where you can discuss this and other companies with fellow investors. First off, this is an S1 filing, meaning AUDDIA is registering shares for potential future sale. In this case, it's a resale of stock by a company called White Lion Capital. Basically, AUDDIA has an agreement where White Lion can buy up to $10 million worth of AUDDIA stock. This filing allows White Lion to then resell those shares to the public. AUDDIA isn't directly selling shares to the public here and won't get any money from White Lion selling its shares, but AUDDIA could receive up to $10 million from selling its shares to White Lion at some point. Here's a quick recap of some recent troubles. It seems AUDDIA had some issues keeping its stock price and its overall financial health up to NASDAQ standards. They got notices from NASDAQ, the stock market they are listed on, about not meeting the minimum requirements to stay listed. These requirements include having enough stockholder equity, essentially assets minus liabilities, and maintaining a minimum stock price of $1. AUDDIA managed to get back in compliance with these rules, but it's something to keep an eye on. For a year after regaining compliance with the equity requirement, the company will be subject to a mandatory panel monitor, meaning NASDAQ will be keeping a close eye on them. Speaking of keeping an eye on things, here's one of the big risks AUDDIA faces. They might not be able to stay listed on the NASDAQ capital market. If they get kicked off NASDAQ, it could make their stock less appealing to investors, harder to trade, and more volatile, meaning the price could swing wildly. It would also make it tougher for them to raise money in the future. They did a reverse stock split. Imagine taking 17 slices of pizza and squishing them into one slice. That's kind of what a reverse stock split does. AUDDIA took 17 of their existing shares and combined them into one new share. Why do this? It usually boosts the stock price, which can help them meet NASDAQ's listing requirements and make the stock look more attractive to some investors. So what does AUDDIA actually do? They're trying to change how we listen to audio with their Fajr app. The Fajr app lets users listen to AM/FM radio stations without commercials. The app replaces the ad breaks with music that sounds like the radio station being played. Think of it as a personalized, commercial-free radio experience. The app also includes podcasts where users can skip ads, as well as exclusive content like new music and curated stations. Now, let's talk about this deal with White Lion Capital. AUDDIA has entered into several agreements with White Lion over the past few years. These agreements are basically a financial tool that gives AUDDIA the option to sell shares to White Lion when they need cash. The current agreements allows AUDDIA to sell up to $10 million worth of stock to White Lion, who can then resell it to the public. They've had similar agreements in the past, selling over $8 million worth of shares. I mentioned AUDDIA had trouble meeting NASDAQ's listing requirements, so let's take a closer look at that. They received notices from NASDAQ saying they weren't in compliance with rules about minimum stockholder equity and minimum bid price. They did manage to regain compliance, but it highlights the financial challenges they've been facing. And here's the kicker. AUDDIA's auditors have expressed substantial doubt about their ability to continue as a going concern. This is auditor speak for, we're not sure if this company can stay in business. It's based on their financial losses and the need for more funding. They're burning through cash and need to find more money to keep operating. Here are a few key numbers from the offering. Before this potential offering, they had about 620,000 shares of common stock outstanding. If they sell all the shares registered in this filing to White Lion, and those shares get sold to the public, that number could jump to over 5.6 million. Also important is the selling security holder part. The selling security holder will receive all of the proceeds from the sale of the shares offered for sale by it. Under this prospectus, we will not receive proceeds from the sale of the shares offered for sale by it. Under this prospectus, we will not receive proceeds from the sale of the shares offered for sale by it under this prospectus. We will not receive proceeds from the sale of the shares offered for sale by it under this prospectus. We will not receive proceeds from the sale of the shares by the selling security holder. What happens to the money? AUDDIA says they expect to use the proceeds for general corporate purposes, including working capital. This basically means they'll use it to fund day-to-day operations and keep the lights on. AUDDIA has also issued something called Series B convertible preferred stock. Think of it as a special type of stock that can be converted into regular common stock. These preferred stockholders get paid a dividend in April of last year. They issued $2,003 million of this Series B preferred stock. This preferred stock can be converted to common stock at $6.29 a share. Let's highlight some of the risks AUDDIA mentions. Issuing more shares to White Lion dilutes the value of existing shares, which means each share is worth less. Also, if White Lion sells a lot of shares quickly, it could drive down the stock price. Additionally, AUDDIA's management has a lot of flexibility in how they use any money they get from White Lion, and there's no guarantee they'll use it effectively. AUDDIA's financial statements were audited by Haney & Company, who are therefore experts in accounting and auditing. Now, for my opinion, AUDDIA is in a tough spot. On one hand, they have a potentially interesting product in the Phaedra app, addressing a real consumer desire for ad-free radio. On the other hand, they're facing significant financial challenges, as evidenced by the going concern warning from their auditors. Their reliance on deals like the one with White Lion Capital highlights their difficulty in raising capital through more traditional means. While the Phaedra app has potential, they need to prove they can attract paying subscribers and generate sustainable revenue. The reverse stock split and efforts to regain compliance with Nasdaq's listing requirements feel like short-term fixes for deeper problems. I am not super excited about the company because the fundamentals don't seem to match the promises and expectations of the future. They need to make sure they turn things around quickly or this company might not last. Alright, that's our breakdown of AUDDIA's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.